Hi there, this is Alvin from Dr. Wealth. In this video, I'm going to share with you 3 interesting companies with good assets that I think can possibly spin off into REITs. And I know that investors love REITs a lot, especially local investors, because of the high yields and the dividends, consistent dividends that you can collect throughout the year. And we know that there are quite big names, successful REITs that have been listed, the Capital Land series and the Maple Tree series, but I think there are room for more of such high quality Singapore-based REITs to be created, and there are 3 more. So the first one is actually Singtel. This may not come as a surprise because there have been talks about Singtel having that great data centers that is based in Singapore, right? They have quite a number of them, and there's a leader in Singapore actually with 14% market share. Yet it is all merged together under Singtel entity, and that means that there's some conglomerate discount that is embedded in the share price. So if Singtel spin off this independent data center REIT, it would have worth a lot more combined together, right? So in this case, it's the reverse. It's not the sum is the whole is greater than the sum of parts. In this case, it's the opposite, where if you split them, the sum of parts would be greater than the whole itself, right? So Singtel, I believe that by breaking down, by spinning off this data center REIT, would create wealth and unlock value for shareholders. Just like what they did to NetLink Trust, right? When they spin off the fiber network into a separate listing, right? That can help unlock value, and the shareholders of Singtel get units in this new NetLink Trust. So similarly, I think that there is room for Singtel to eventually list and spin off this, and I think that the restructuring is moving towards this direction because they created this digital infrastructure company. Okay, so essentially that could be the REIT, the data center REIT that Singtel can spin off. So looking at their data centers, they have more than 200 megawatts in terms of the combined capacity, right? Moving to that towards that direction. And comparatively, another similar Singapore-centric data center REIT would be Keppel DC, which have 300 megawatts. So you can see that they are quite comparable, and I think that the listing itself is large enough for Singtel to do it. In fact, they are the market leader in Singapore. So to size up their asset value, right, it is not clear because they didn't split into what is data centers asset. Okay, so definitely some of the buildings, about $548 million is belong to the data center building, and there could also be plant and equipment that is part of the data center. Unfortunately, there is no further details how the assets are being split, so I don't know how much are the data center worth actually, right? But it's quite clear that it should be less than the sum of these two, and that would mean that it's probably less than $5 billion. Right, so let's make a bit more comparison between this Singtel Digital Infrastructure Co. and Keppel DC. In terms of FY23 revenue, the Singtel Digital Infrastructure Company has higher revenue of 273 million, while Keppel DC had 141 million. So in terms of the data center value, right, just now we said that Singtel is less than 5 billion, for Keppel DC is about 3.7 billion. So it is possible that the Singtel Infrastructure REIT would be higher or bigger than Keppel DC market cap, right? If it is. And even I took the liberty, right, to create a logo for this Singtel Digital Infrastructure Trust. Okay, so if it really happened, that will be great for shareholders. I'm not a Singtel shareholder, but I'll be happy for you guys. All right. The next one is UOL. Okay, UOL is one of the STI index component company, and it has a lot of great properties in Singapore as overseas as well, but I'm going to just focus on Singapore properties, okay, because they are worth a premium. We have really limited land over here, and Singapore property market has always been a lot more resilient compared to any parts of the world, right? So this is their office units, office properties in Singapore. There's United Square, Novena Square, Odeon, UIC Building, Singapore Land Tower, SGX Centre 2, The Gateway, Tampines Plaza 1 and 2, as well as Stamford Court. Okay, so these are the office. And then the next one will be the retail. There's Kinex, there's Velocity at Novena Square, United Square Shopping Centre, the Plaza, Marina Square as well, and Westmore. Right, so you can see that these are again quite well-known properties that Singaporeans should know. Okay, and I also sum up their valuation, right? All the different properties based on the 31st December 2023 valuation. Not all of the buildings are 100% owned, but some are actually owned by their subsidiary, which is Singapore Land in this case. But even for that, we are looking at a combined $10.9 billion worth of local retail office properties. And the closest comparison would be to CICT, CapitaLand Integrated Commercial Trust, which is a combination of office and malls, right? So for CICT, the total investment property portfolio is worth $24 billion. So even for UOL, if it indeed spin off a UOL REIT, it would be about less than half the size of CICT, right? Even that said, I think it will be one of the key competitor for capital if it indeed spin off. And it's not about losing control, right? Even for the Singtel case, some of the thinking might be, oh, if we spin off this REIT, then I will lose control. The quality of managing these properties will go down, which is not true, right? Because even if they spin off to a separate listing, the parent company does not need to sell 100%, right? They can sell, say, 20% of the shareholding, right, to public investors, and yet at the same time they retain the control, and all the financial figures on this for these REITs will also be consolidated at the parent level. So to me, there is no change, but yet at the same time you give investors an opportunity to invest in some of these assets, and there is some value unlocking event, right? And the shareholders or the loyal shareholders of these companies will get rewarded with dividend in specie, right, where they get the shares or the units of these newly spin-off REITs. So I think there can be a lot of these kind of advantages. Oh yeah, one more advantage is that the parent company get to recycle the capital, right? Because otherwise the capital is stuck in these properties. But if they sell 20%, they can get that money, they can pay down the debt, right? Reduce the interest rate impact, or even buy more property, buy more land and develop them. So there can be a lot of advantages, and I think that they should really consider it. Okay, so I also make a logo for UOL REIT, right? That it's not copyrighted. Please, if you want to use it, right, you decide to list it and use it, by all means, royalty free. Okay, and the last one is not a listed company, but everybody knows it, right? Which is Changi Airport Group, which owns the airport facilities in Singapore. And there's T1, T2, T3, T4, and there's also this Jewel, which is a huge shopping mall that's connected to the terminals. So it's definitely a very good asset. There are airport stocks that are listed in overseas, like for example in Thailand, that are even in Malaysia, there are airport stocks that are traded on the market exchange. But in Singapore, it's not. And Singapore people or investors always complain there's not enough exciting stocks, there's not enough good listing. So I think that by putting up this Changi Airport Group, which is also a global brand, could attract more investors, not just local investors, but also overseas international investors to look at Singapore stocks. So I do think that there is some benefits to it. Again, Changi Airport Group does not need to spin off 100% away from the parent company. It can just sell off 20%, 30%. It could also give a chance to local investors to own a piece of Changi Airport, right? So I do think that that's a very interesting value proposition. I do think that a lot of investors will be interested as well. And looking at the balance sheet, right, I'm trying to figure out again how much value of these airports are. And it's hard because there's no breakdown. There's not even notes because they're not a public listed company. They don't need to disclose a lot of details, right? So it's already very good that an annual report, financial statements are being published. So based on 2023 FY, we're looking at a property plant equipment of $8 billion and investment property of $1.2 billion. So altogether is about $10 billion worth of properties. Okay, so definitely it's not all $10 billion are airport valuation. A good part of it will be, right? But I do think that it will be a very attractive listing. And we also know that Changi Airport is one of the top airports in the world. They often won the best airport of the year, right? But last year they didn't. They were second, right? But if they don't win first, they're probably in the top three. So I do think that that is that kind of glamour that Changi Airport can attract and bring that glamour to the Singapore stock market as well if they are listed. So I also hope that they can. And again, another logo, Changi Airport REIT. How about that, right? So I think it sounds nice and it's a very good branding as well. So that is the three companies where I think that they can spin off very attractive, high quality Singapore-based Singapore-based property REITs, which will draw a lot of interest, not just locals, but hopefully more international investors will look at Singapore stock market, especially for Changi Airport REIT. So those are my views, but I would like to hear yours as well, right? What do you think about these three REITs? And if these three REITs really get spin off and listed and traded, which one is the one that you like the most, right? Share your for and against arguments as well. I'm interested to know what you think, right? So do like this video, subscribe to the channel, and I'll see you in the next one. Goodbye.